Hello everyone, and welcome back to another video, another swing trading focused video, and I'm super excited for you guys to see what I have to say in this video. I'm going to give you guys, as you can see from the title, a way to time the bounce perfectly on uptrending stocks so that you can swing right at the bottom and you can ride the wave, for example on Apple, all the way to the top, right? And so when you're looking to time a bottom, obviously it's not always going to be perfect, but I have a few key things you want to look for on charts when you're looking for a potential reversal zone to continue the trend. Okay, so first of all, we're going to take a look at this chart on Apple. Okay, now here's the first thing that you need to look for, and this is really the key thing when you're looking for a potential bounce spot or a potential in a downtrend. If you're looking for a potential reversal spot to the downside, the same rules apply. As the market's in an uptrend, I'm going to be using uptrending examples because that's what's here, but the same rules would apply for a downtrend. The first thing you need to look for is a strong, tight, long area of consolidation, movement sideways, right? Otherwise known as a breakout area, because after this price action does move sideways for a while, typically it will break out and then it will come back to retest that area at a later time. And so here on Apple, we're just going to zoom in here, kind of the middle part of the chart here, when Apple found a bottom and started uptrending. And out of this whole chart, I think it's pretty easy to see what is the most sideways consolidation type price action on this chart. Well, I kind of see two areas at the moment. I see this area here, and the other area I noticed is this area here, right? Very sideways, nice consolidation. So what I'm going to do when I'm looking for swing trades and I see one of these consolidation zones is I simply mark the top of it, which is going to be that top wick. You can see this candle finally breaks it and continues trend. So we're not going to include that candle because that's when trend has continued to the upside. So this is the top of that zone. We're going to draw a zone from the top of that consolidation range down to the bottom, right? And the bottom is going to be this candle low here. You can see this was still in trend, and then this is where we stayed sideways, and so that's going to be our zone. Now you can see now, yes, that price stopped here, and it's very easy to draw this zone and say, wow, I'm right, this price stopped here. But we're going to look at some examples that haven't come back and stopped yet too, and see what we can find on those. Second thing you want to look for is open gaps around that consolidation area, and Apple also fits that criteria. We had an open gap right here at about the 173.20 level that was still open. When price comes back to fill gaps, they can often act as a very strong support where buyers will show up. So we now have two of the criteria fitting on Apple. We have a tight consolidation range or breakout area, and we have a gap within that breakout area. Third criteria we want to look for are breakup candle lows. Breakup candle lows are an area where buyers showed up big and pushed the price much higher in excess, right? And so typically when price comes back to a breakup candle low or a breakdown candle high, that's where sellers would show up typically. When price comes back to that, that is also another strong buy area. When we focus on breakout areas, there's typically going to be a break-up candle, right? Or there's typically going to be a breakdown candle. So usually you will find one of those things as well. As you can see, we have a break-up candle low on Apple here that breaks out of this consolidation range. So we have three of the criteria. Fourth criteria is you want to look for any other any other pivots, right? Any other changes of direction that happened in this zone with previous price action. Excuse me. As we look to the left here, we can see, excuse me, jeez. As we look to the left here, we can see there are other pivots, right? Apple's price came into this 171 area, bounced quite nicely, came back down, bounced just below, then used that same area as resistance before continuing on down. So we now have all of the criteria met to create what I like to call a bounce zone, a high probability bounce zone. And as we can see, Apple came down to this zone, and this is an area where you can either do one, have an aggressive entry, and you can simply enter into your position in stages as it goes through the zone, kind of hoping that it will go up. Or you can also add in partially once it gets to the zone, and maybe on a break back above the zone is when you add on. You can also just wait for it come into the zone and break back above, and that is typically a strong sign that that zone is being used as support and price will continue up. Okay. Sorry, it's morning. Just waking up. But so yeah, this is the other zone that I've noticed is right here. And you know what? You have another one kind of right here, right? So as we can see, Apple is rather extended now. On any major daily chart pullback, the first place I would be looking for strong support would be this area. And I just want you to note how I've drawn this zone is I've seen a gap down here that's a little bit below maybe the consolidation area, but I want to always include nearby gaps in my zone. So I've included this bottom gap. If Apple comes and overshoots maybe the top of the zone, the top of the consolidation range, it's probably going for that gap, right? Price likes to fill gaps. We don't really have a breakup candle, right? Maybe this is a breakup candle, you could argue. It's a little bit smaller, but you could argue that's possibly a breakup candle over this range. So somewhere in that range, we have the area of consolidation. We have multiple open gaps. We have two right here, right? Do we have any pivots in this area? Well, no, not really. I mean, we have these tiny pivots, but we don't really have any other price action. So for a short-term buy, I do like this zone. I don't know if I like it as much for a swing because the consolidation didn't happen for as long. We don't have any really large breakup candle lows, and we don't really have any former pivots, right? So I don't like that one quite as much. So you want to make sure, if you want the most high probability setups, that you have all four criteria meeting, especially for long swing trades. And if you don't have all four meeting, they can still work very well a zone like this, but it might not lead to as big of a rally as something that meets all four criteria. Okay. We're going to look at a couple other examples here. Here's Roku. And on Roku, what we're going to do is we're going to look at this drop that we had right here. Okay, we're going to look at this drop. Now, the area of consolidation that I see on Roku happens to be right here, right? We have an area of consolidation. Now, there's a couple ways you could mark this one. After it gaps up, you see, okay, it's back on an uptrend, and you want to find, well, when it comes down, where's a likely spot for it to bounce? So this is the top of the consolidation range. Before we broke up, you want to go down and mark the top of that zone. So that's going to be the top of our rectangle there. Now, the bottom, it's a little bit choppy here, right? So you have a couple ways to mark this. You can either mark the bottom before it took off, or if you want to include this in your consolidation range, which it might make sense to, you might want to include, right, that bottom pivot. But now when we look at our criteria is an area of consolidation. Okay, we've kind of identified that. 2, open gaps. Where is the open gap here? I think it's pretty clear. The open gap sits right here at about 101. Do we have any other gaps down here? Not really. They're all filled, right? There's no open gaps. So for that reason, I'm automatically drawn more towards the middle of this zone. Let's look at our third, a breakup candle low. Now in this case, when a stock gaps up like this, it's obviously not going to show a candle here. But what I want you to imagine is that this daily candle on this day here really goes from this gap all the way up here. So in theory, this is actually a massive breakup candle, and the low of the breakup candle is at the gap. So good, we have a breakup candle and we have a large gap. That's very good. I'm immediately more drawn to the middle area of this zone. 4, do we have any pivots that are in this area? Well, yeah, we can see up here Roku ran up and we made a high of around 107.60, right? And we came down, we came back to that same area, went underneath it, little above, kept struggling with it, right? So we can see that this area is probably important because it's met all 4 of the criteria now. And all 4 of the criteria happen to take place up here. So immediately I'm more drawn to draw the zone up to this pivot here, right? Because all of our signs and signals are happening on the upper end of that zone. They're not happening down here. We don't have gaps. We don't have breakup candles. We don't really have former pivots, not anything that led to a sharp rejection. So I'm going to move the zone up. Again, as we can see, has this played an important part in Roku's price action? Absolutely, right? We had a beautiful, beautiful bounce off this level. Came back to retest the top again and had another beautiful bounce. Okay, so if you have all 4 criteria, like I said, we talked about how you can enter these. One of the most powerful and confirmative ways is to simply wait for a daily break back above. And then that's usually when the trend will really start again. Now, this strategy, it works very well, but you have to make sure that the area of consolidation has happened for a while, right? If you look at something like this, right, it's not going to be quite as powerful as something that has stayed in the same area for many weeks or even many months. Really quickly, I'll just go look at, for example, this is one that's currently breaking out of this area. How important do you think this area is going to be when ICE eventually comes back down and retests it? Right, I guarantee you, because it's been in this pattern for 5 months. So honestly, the longer the better. The longer, the more powerful the move will likely be over a long period of time. So that's a very important thing to keep in mind. We're going to go over one more that has already happened and one more that has not happened yet, and see if we can identify a bounce zone where price will likely come back to. So this one is on Microsoft, or sorry, on Facebook, excuse me. And so here is the area of long sideways movement. It's not sloping down, it's not sloping up, it has equal highs, equal lows, right? So it's an area of consolidation of sideways movement. Although it is quite a wide range, it's pretty easy to see that if you can draw a rectangle around it, right, then it's probably a pretty good area. Okay, Now, you might want to say, well, why wouldn't you draw it here, right? Why wouldn't you draw it there? There's a bit of a rectangle there. There's a gap. Why wouldn't you draw it there? And again, it's the length aspect. How long has that stock consolidated in that area? And that will usually make it a more powerful area, because when a stock consolidates for a long amount of time, that's where there's an equal amount of buyers and sellers. And so if there's an equal amount of buyers and sellers for, say, 6 months or a year at a certain price range, when there finally becomes an excess, there's so many traders that are going to hop onto that excess side of the market that when it comes back to that area, it's much more important to the market, right? That's where buyers are going to look to step in. Everybody that was usually equal at this area has now turned to the buy side at this area, right? And so whenever you have an excess of buyers or an excess of sellers, that's when price is going to move. So we've identified our consolidation range. Number 2, do we have any open gaps? Yes, we have a few of them. Here you can see this gap here has not been filled. This gap has not been filled. This gap has not been filled. There's even a gap all the way down here that's slightly not filled. So we have 4 gaps within this zone that are not filled. That makes this an excellent zone to bounce. 3, breakup candle lows. We do have a nice breakup candle here. So we have our next criteria, a breakup candle low. And 4, do we have any former pivots in this area? Absolutely. If you come down here and look, there was a large gap. Whenever something comes into a price very fast, for example, in the form of a large gap, and stops somewhere, take note of that area. Whenever price comes into an area very fast, I guarantee you when it turns around, that area is important. So we see 1 pivot, 2 pivot, breakthrough. We have a retesting pivot. Down here we test the top of the zone. These pivots here test the bottom of the zone. So I mean, we have about 6, 7, 8 pivots, and that's not even going back further, where you can clearly see there's many more pivots in this area. Critical area for Facebook. So we have all 4, and not only do we have all 4, we have many examples of each of the criteria. We have many gaps, we have many pivots that you can see are clearly very important. So I really like this bounce zone on Facebook. And yes, it's very wide, and that's why in larger time frames, like a daily chart, this is mainly a swing strategy, right? It could even be an investing strategy. You can place your investments based on drawing these zones and investing at the bottom, and you don't have to worry because you don't have to worry as long as you're investing in growth companies. That is, you have to be investing in good companies if you're going to use this to invest. But you don't have to really worry, because even the ones that might not work out, okay, you can either sell them for a small loss, or you can just, if you're in a nice growth company, you can just hold it out. But I guarantee you 90% of these times, if you stick to the criteria, the stock is going to bounce and it's going to see a very nice reaction. So yeah, as we can see, Facebook came down, and what did it do? It really went for this bottom gap, in my opinion. Prices attracted to gaps, and we can see this breakdown candle. It broke all the other gaps and closed below. The next day it comes down and it slightly misses that gap, and boom, takes off. And again, you can see after Facebook closes a day above the zone again, the zone becomes support, and that's when the move really starts going. So again, if you want to wait for confirmation on these, it's always best to wait for a day to close above the zone. The zone will become support, and boom, that's when you'll get the bulk of the move. And look, I mean, this one, it didn't all go at once, right? Facebook came back down, and it's amazing. It tested the zone, the top of the zone again. huge reversal candle, and boom, off to new highs Facebook goes. Right? So powerful, powerful stuff here. Lastly, let's look at Microsoft, which I see a beautiful potential for a bounce, and I'm sure you can see it too. It's pretty damn hard to miss. Obviously, I'm talking about this incredible consolidation zone. All right, so we'll draw it from that top pivot, and I'm going to draw it all the way down to that low that it made. And we're going to look for the key areas, right? So we have the area of consolidation, the breakout area. 2, we look for open gaps, and I'll just mark them quickly with my price level tool. We have that obvious open gap that broke up. That could also be a breakup candle. Remember, that's really a break-up candle, even though the price happened after hours, so you can't see it. That is a breakup candle, so that's also a breakup candle low. We have another open gap just below. We have no more open gaps. So what does that tell us? So far, the top of the zone will be more powerful because we have gaps up there and no gaps on the bottom. So now let's look at where are other pivots. So we have pivots. We have one pivot that saw a pretty nice reaction. This would be at the bottom of the zone. So we can just mark that. There's a pivot. So the bottom of the zone, okay, that's added a point. Let's look for any other pivots. Well, we have a lot of really, really choppy pivots in here. So it's really tough to decipher on Microsoft whether the top of this zone or bottom of zone will be more powerful in the end. I'm honestly not really sure what I would think. I think I would keep the zone as big as it is because as you can see, you have pivots up here, many pivots on the top, but you also have many pivots on the bottom. So it's a little bit hard to tell for me on Microsoft which side of the zone would come into play more. So I'd keep it as the entire zone. I think I'm going to weigh a little bit more into the top of the zone. I would probably have an aggressive entry once Microsoft came into about the 138 area, and I would add on if it ended up getting to the 131. And yeah, I mean, I guarantee you guys, watch when Microsoft comes back, and I guarantee you we're going to see a bounce off this zone, and Microsoft is likely going to see a massive rally off of this zone. When price is in the consolidation area for a very long period of time, that is when you see the most massive reactions off of it. Okay, so I hope you guys learned something. And not only is this good for swing trading, it can be good even for day trading. It can be good for short swing trading. You know, if you look on hourly charts, if you look on 15-minute charts, here's an example on Apple, right? You have the same type of thing, but on an hourly chart, right? You have a breakup area, right? This is a breakout area. You have a sideways zone. The zone might not be perfect, but you have a sideways zone. You have a breakup candle low. You have a gap just above, so maybe it doesn't come all the way down to the zone. Maybe you want to include that gap in your zone. There you go. And this one might not be perfect because the gap's a bit far. If I had a gap right here as well, right below, that would be a beautiful zone, right? And if I had this pivot coming up right here and back down, that would be all 4 criteria meeting, and that would be a beautiful bounce buy for Apple. And you can do that on shorter term time frames. It doesn't always have to be a daily chart. It doesn't have to be swings. You can do the same thing on a weekly chart, a monthly chart, any type of chart. It's all going to work the same. The same ideas apply. Okay, so yeah, that's really going to be it. Please like the video and share the video. I hope this guys helps you in your trading. And yeah, I hope you guys are having a good start to your year, and happy trading. I'll see you in the next one. Peace.